Buy on red days. So I've said it before, when there's blood on the streets, when you've got massive opportunities as we have right now across the precious metals, I like to swoop in and sniper in and get lower entries. So right now we have gold trading sub 1,900 US dollars per ounce. Exactly as we talked you through previously. Take the opportunity last week on the breakout that we got into Wednesday's FOMC statement to lock in those profits. Don't have popcorn trades where the trade goes massively in your direction, you lock in nothing, and then subsequently you lose your profit. Constantly make sure that you're locking in those profits. Now we've been gifted with the sell-off that we're seeing on the precious metals. So yes, I like gold here for a buy opportunity, sub 1,900 US dollars per ounce. Obviously, we're looking to get best possible price here, but it has played out to perfection. The end of quarter profit taking that we taught you to expect. The month of September being very much a risk-off month here. And as such, we have, of course, now banked our dollar index position as well. Dollar index has worked out perfectly. With our clients, we've banked 600 points on the dollar index. So the inverse of that, of course, has seen a meltdown on the euro and the pound over the last couple of months here. So we've capitalized massively by benefiting on all this upside on the US dollar, banking that profit, rotating it back at the swing lows here for multiple precious metals. So I do like gold here again, sub 1,900 US dollars per ounce. As always, we're aiming to get best possible price here before we then transition into the final quarter of the year, which historically, the final 3 months of the year, these can be the most lucrative period of the year for commodity traders. Later on this week on Friday, we have PCE data, the Fed's preferred measure of inflation. As we get towards the end of the week, we've then got China on their 1 week public holidays as well. So what happens during the Asia Pacific session, you're going to see thinner liquidity, more exaggerated moves. The lead up to this and the bloodbath that we're seeing right now across all risk on assets, you name it, you've seen it happen over the last week. S&P 500, Dow Jones, the China A50, a pound, the euro, everything has been smashed to the downside as we've seen the dollar explode to the highest level since February of this year. We also took the opportunity at the start of the week to capitalize on a nice pump to the upside for natural gas as well. So we locked in 800 points profit on natural gas. And finally, we've booked all of our sell shorts as well on the precious metals that we've had on over the month of September. We banked the remainder of our sell short on silver. In fact, over the course of the week so far, that actually nets us over 1,500 points profit that we banked with our clients over this week. So again, I know you know this calculation, but just in case you don't, for every one lot contract that you will be trading, that's going to give you $15,000 of profit. For every 10 lot contract you'll be trading, that's $150,000 of profit. If you're not making money on commodities at the moment, you absolutely should be. September has been such a straightforward month to capitalize on the price action with multiple commodities. Very simple playbook. We've been long the dollar the whole month. That's been a massive trade opportunity. We've been selling short the metals since the beginning of the month as well, and also taking advantage of these quick impulse moves higher that we've seen in the lead up to the FOMC statement to bank some of our lower trades, for example on palladium, where we were able to bank over 500 points. As you know, in the lead up to the FOMC statement last week, we also booked 800 points over 2 positions on platinum. So there's been constant opportunities to trade commodities over the month of September. This comes back to the point that Goldman Sachs have been making. It is the golden age of trading. If you're just buying and holding and you're not taking profit throughout the year, you're missing out massively on each cycle that you get. Each quarter, you're going to make a lot more money here by actively managing your portfolio. Last week is a massive example on that with the cascading sell-offs that we've seen across the board for equities, for commodities. If you're positioned right, you bank at the highs, you rotate, you sell short, and then you buy back again at lower prices, exactly like we're seeing right now with gold sub 1,900 US dollars per ounce. This, of course, comes back to utilizing data, statistics, market intelligence, really understanding the capital flows in the market that you can obviously capitalize on. Alongside that, learning and understanding the daily, weekly, quarterly, real-time data-driven cycles. Further compound that with the intermarket correlations, the ratios in the market, the key areas of liquidity that are targeted. So this will help you massively with the precision of your entries and also knowing the right point of the cycle to bank your profits and then rinse and repeat. Then further compound that with the narratives in the market, the macroeconomics, the fundamentals, and then finally how the hedge funds, the money managers, the banks and institutions, how they're positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.